This is a weekly chart of gold futures that we're looking at. And the pattern that we have on this chart is a bullish Gartley pattern. You see it came down off the September 2011 highs. We've had two parallel moves, and these, for the time being at least, have terminated right at the 618 retracement of this entire move up off the October 8 low to the September 2011 high. And so what we want to do now is blow this up a little bit and take a look at the daily chart so we can see this price action a little bit more detail. So there's the pattern, the low that we were talking about right there on the weekly chart from June 28th. And as you can see, we've had a nice rally off this. It lasted 16 days, most likely a wave 1 or a high. And then the market corrected back down, 11 days down. And probably we think this is a wave 2 or B low. That's our thinking, at least at this point. So what are we looking for in gold? Well, as you can see, if you look at this last correction that we had in gold, we'll just measure this, the April 16th low to the May 3rd high. And if you project that from the June 28th low, you see just how harmonic this market is. Gold's a very harmonic market. The correction came in exactly equal to this previous correction. And so we think we're probably going to get about the same thing off of this low. That's, of course, just a probability, not a certainty. But if you measure this projection of this low to this high off of this potential wave 2 or B low, it comes right out at 1438.40. And I'm going to squish this chart up for just a second so you can see the last time we had a larger degree correction in gold. And it was back in this move here from May 2012 up into October. And we're going to measure this as well. So let me grab our tool there. It's May 23rd to October 5th. And if we project this from this June 23rd low, you'll notice that it comes in right on top of this other projection. So we've got two sets of price projections, both indicating about 1438. We can also do a time projection. We had 16 days up in this move, 11 days down. So if we get a symmetrical correction, we'd have at least 16 days back up, which means we wouldn't expect this to be over before August 29th. So again, no one really knows what's going to happen next in financial markets. You have really very little control over anything other than the risk, the amount of risk that you take. So you always want to limit your risk, and you would do that by putting a stop in the market. This, if this analysis is correct, and this market is going to continue higher, at least up to this 1438 area, we would not anticipate it to come down back below this 1271 area. So your risk would be to just below the 1271 level. So we'll watch how this unfolds in the coming weeks. But our analysis suggests higher prices for gold.